All right. Good morning, everybody. We are going to really quickly check the audio on systems. That's looking good. So I think we're all set. All right. So good morning. Welcome to another Engineering the Markets. My name is Jared, and it is April 7th, 2022. It's Thursday, so near the end of the week. Wanted to start off with the SPX. Yesterday, if you recall, we were starting with a gap down open in the market. Market had a chance to breach its expected move. And as you can see, the S&P did have some mild trade activity outside of our expected move bounds, that 44.71 being a key inflection point for different dynamics of the market to kick in. It was a fairly volatile session overall. We certainly had a bit of a downdraft in the morning, lots of weakness in certain major market cap tech stocks and I would say larger market cap areas of the S&P. But if we zoom in here, you can see that most of the trade, once we got to the lower bound, was centered around this relative price. There was some relative support at the low of day. We obviously saw a bit of back testing a couple of times, getting back into the expected move range. And then before we got the dreaded FOMC minutes fully released, we saw a bit of short covering as market was likely not to head further down, and the volatility was about to come in once those minutes were released. So during the actual minutes, obviously, trade activity is more sporadic. There usually isn't a clear trend. And just to kind of show, what sort of volatility we can have on these announcements, especially, just being prepared for those moments if you were looking forward to it or maybe unaware that it was going to be that volatile. You can see that we had sort of a 5-minute initial algorithmic reaction candle, broke the morning high, went down and broke the low of day. So we basically took out any longs that might have been still holding from the bottom of the session. Market ripped and rallied through this area, made a little 5-minute trend change, looked like it was going to go further, took out the high, so possibly taking out some shorts, and then slammed back down into that sort of swing low support and the expected move where we tightened up for the rest of the session. So when you look at trade like that, it's obviously really exciting trade in the moment, and there's lots of back and forth swings. But understand that it is a pretty challenging market. It's hard to define risk, especially as a directional trader. And usually what you're doing is kind of riding certain momentum waves as they form, with the understanding that there is this key inflection point centered around the expected move. So that was yesterday's trade. Now, when we look a little deeper, we can say what sectors performed yesterday, which ones were strong amidst a market that was gapping down and actually closed weaker than the previous session. Same idea here, and if you've been watching Artie's latest video on YouTube, you'll note that he's been discussing some of these sectors. Once again, it's utilities up 2% on the session. Very strong close. Once again, all-time highs made on yesterday's session. Some relative strength in healthcare. And then we have things like real estate, consumer staples, and of course, energy with a slight standout. You pair this with the things that are weak, the sectors that are overall hurting the S&P to the downside, and you have the big players here, the communication services, technology, and discretionaries. What's so interesting is that we actually started the week with some of these sectors being up. They actually had pretty strong Monday sessions, like the beginning of the week, put up a bit of a maybe like a short-term bullish signal and a trap for those sectors. And now we're seeing them draw back down and sort of retreat away from their more bullish posture. So all in all, what this looks like is we look at the weekly performance. The ones that have been outperforming on multiple sessions are certainly still up week to date. Some of the weakness has come back into technology and discretionaries, and things like financials, which we've talked about briefly, possible sort of bearish thesis with some of the yield spreads being as flat as they are currently. They're seeing some relative weakness in certain sectors and industries of financial as a group, usually more focused on the banks as opposed to specific insurance companies. So all in all, what this does is provide us with the back and forth price action that we're starting to get day in and day out. And what's great about this market is you can have different time frame biases based around what the technicals are telling you. For example, the S&P certainly had a very strong recovery off of the lows. So as a bull, you might say that the weekly is so strong that I'm still searching for a weekly higher low. We've obviously made enough room for weekly bulls to change the weekly trend. And while the weekly trend is not uptrending currently, you're certainly scouting for that potential and maybe looking for the right signals to enter into more long bias trade. You're also noting that on yesterday's session, because we gapped down and we broke the swing low from earlier this week, we are in weekly consolidation. Basically, the weekly top has been set, given that we have a weekly candle breaking the pattern of higher highs and higher lows every week. So that's indicative that consolidation is underway. And the question is, what does that consolidation look like? Now, this is where we often look at Fibonacci. We say, based on maybe the low of expansion or even the all-time low from this corrective wave, how far is our retracement? Where can we expect buyer support? And if we get buyer support, what is the next wave of the market? i.e., if we pull back too much, we're not necessarily looking for a new weekly high. We might be looking for a weekly lower high or some sort of equilibrium style compression. So you pair that optimistically bullish approach on the weekly, and you pair that with the daily, and you basically say, okay, well, the daily is in a downtrend. That is indicative of the weekly consolidation. So daily being in a downtrend, thinking more bearish. If we get a bounce on the daily, you might be looking to have a short-term bias to the downside and essentially force the weekly to continue searching for its support. Some areas of interest for this market continue to be along the uptrend. For example, the S&P did relatively stop where it was supposed to at the swing lows from our most recent uptrend. And what this does is it forms the posture of a potential head and shoulder. If we get the rebound starting from this low, we might be looking for the market to tag the top side of the previous shoulder, which is where the short-term trend did change on the move from the bottom. So an hourly downtrend formed potential for a shoulder, we expand, and then of course we are back at these lows. A lot of keen traders might also notice that we're losing things like trendline support. And this is indicative of some of the sharper selling that we got yesterday. We might also be looking for the market to backtest this particular trend line. And once again, this is still technically a head and shoulder, just a more slanted look. So all of this kind of puts the theme together of trends are changing on different time frames, but it doesn't mean that the market is going to necessarily go full bear once again. It just means that we're having to deal with some back and forth trade on different time frames. Weekly, certainly scouting for higher lows, daily and hourly in relative downtrends and keeping an eye on these head and shoulder resistance points for the market to reject if we do get an upward bound swing or a push to the upside. As we combine volume profile, this is where we simply say, okay, the market's simply bouncing from value zone to value zone. We get high value node into lower pocket regions. That's often where the market can expand pretty quickly, usually trending style days in those regions. And then if we tag upper volume nodes and reject, then that sets the stage for continued downside. In this case, looking at volume profile, a move back to 452 is really not out of the question, especially if we start to curl against this previous support. So these are all the sort of macro looks in the S&P. And what we're doing here is pairing that with the sector view that we've continued to monitor day in and day out for this week. And simply note that amidst the S&P daily weakness, there has been relative strength. And we keep talking about where that strength is located. It's located in utilities. It's located in real estate. This one's kind of an interesting one because this is not necessarily concentrated on residential real estate. This particular ETF is more focused on commercial to industrial real estate. You want to be thinking storage units, malls, 5G towers. There's quite a few companies here with different exposures. But most of this is going to be more on the commercial side and funded through different means, as opposed to what is more commonly viewed as a weaker market in the likes of home builders, of which is in a downtrend and is making fresh lows on yesterday's session. Lots of pressure with the 10-year yield rising, and that's putting additional pressure on mortgage rates, which have seen pretty steep increases over the past couple months. So that view, putting trades together around that view, and you'll even note that I would say Artie or BBT proper was looking at some ideas of some possible trades around real estate based on these macro thesis ideas. Let's see. What was the other one that was strong? Staples. So Staples, outperforming. We do have a technical breakout here. We're looking at swing lows that continued a downtrend. That is breaking bullish. That is indicative of a change of sentiment. Obviously we can look to think more bullish moving forward, along with waiting for pullbacks to be bought and start to target something like staple stocks. One of which in particular has been kind of on watch for a lot of us on intraday timeframes. That's been Walmart. Wanting to call this out because yesterday not only was a strong day in general, but it's an all-time high. It's a breakout. So when you're looking at stocks to focus on as a bull, once again, it's about focusing in on the right stocks and knowing where the market is placing their bets. You want to be on the right side of that trade and basically participate in that trade as much as you can. So you want to, another thing to kind of consider here is think about the market condition yesterday. It was hard to find bullish stocks yesterday, especially in the morning session. A stock like Walmart was in an uptrend the entire session and even offered additional upside amidst the volatility we saw from the FOMC minutes. So keep all this in mind. This theme should continue, barring any sort of additional changes from the Fed or from macro events. We should see some similar themes moving forward. And let's see, last but not least, healthcare. I keep bringing this one up as a possible bull. Obviously, that was a bit more confirmed yesterday with a new swing high. We're getting out of a trading range. This has been the theme this entire week. Sort of that very minor bull flag thesis here, just looking to get out of range to expand this chart. And then, as always, looking at the types of stocks that are making the move. United Healthcare, J&J, very expansive moves yesterday. Even the likes of AbbVie and ones that are not necessarily postured at all-time highs, they're all moving in tandem. This is very clear sector rotation performance. Market really doesn't care about the stock itself. It cares about the type of exposure it has in different sectors of the market. And what that does is it tends to lift all boats in the sector. So if you have the entire sector performing, regardless of what the company does, it tends to be a bit more of a bullish or bearish bias across the board. Whereas, of course, we're seeing the opposite in, something maybe like a financial, where you have stocks like Citi, not only in a downtrend, but breaking channel support. You have the likes of Morgan Stanley testing relative lows, once again rejecting from major ranges set back in time. These are very clear moments of technical resistance and support, and it's about participating in these time frames, getting your exposure, and obviously looking for the next trade, because like most markets, you get wave out and wave in. It's just a matter of, are you trending or are you looking at more range bound trading? So all in all, this sector overview, the reason I like it so much is because no matter what your bias is, you just need to be in the right place. So a bear should be focused in on certain sectors. They might be starting to say, cyclicals are going to have a really hard time. Maybe the technicals aren't perfect yet, but maybe I'm looking a bit more bearish. Financials are certainly leaning that way. They might even be starting to look at what was strong and seeing if they can fade the performance. One of the things I'm noticing is that crude, while in focus and while still having a lot of tailwind in its favor, at least for the bullish case, is not necessarily leading the market like it used to be. So what's been the trade over the past couple of weeks is not necessarily bullish energy. It's more neutral energy. It's more compressed. Now, will this change? We'll be looking for that first signal. This is still very much a potential bull breakout in the future. But over the past couple of weeks, if you've been aggressively bullish energy, you probably haven't been paid the same way as other sectors. And that's a good thing to observe as well. Not necessarily that you're wrong in your thesis, but you might want to spread and diversify your bets a little bit, because some sectors are performing a little better in this current time frame. And you pair that with what we talked about yesterday, the likes of natural gas being a bit more of a focus, just pulling up the natural gas futures chart to show the massive expansion we're seeing here. And what that's doing is maybe putting the focus in different stocks. Instead of your XLE type candidates, your crude candidates, we've obviously looked at a few of them before. Market is tending to shift towards things like, Dominion. These are just breakout swing candidates here, very expansive to the upside. And we talked about, not the cleanest of charts, but still opportunity back to make a swing high. And I forget all the names here, but there's been plenty of names kind of called out either in the chat or during the session to look at nat gas. So what this means is, Costco's a good one on YouTube. Thank you, David. What this means is this is the market we're in. This is where we sit. The Fed has discussed in those released minutes from yesterday the type of basis point hike that we should be expecting. We can look at the probability of those rate hikes in the next meeting as I bring up the tool. This is what, once again, Artie discussed in his latest video. And what you're seeing here is we're looking at the next meeting in May. These probabilities are changing pretty much day by day. If I were to shift this back a day or two, so so one day ago, the target rate hike had about a 67% probability. Let's see, I see. Sorry, I'm misreading the chart. So you can see that the probability of a 50 to 75 point rate hike has been going down, and the probability of a higher rate hike, in this case going to 75 to 100, which would be a double, that has gone up. It's gone from a month ago about 29%, a week ago about 70%, 77% one day ago, and we're sitting at 81. So that paints the picture of where we currently are and what we're looking for the next Fed meeting. The market is trying to price in some of this probability because this is indicative of what areas of the market are likely to perform well moving forward. We talked briefly about what all of the Fed fund rate means. It means that some of the overnight trade for banks is going to change. Some of that has minor implications for their profit margins, but more importantly, the actual yield spread and what that's doing for short-term loan to long-term loan is more indicative of weakness in financials. Additionally, they discuss the type of balance sheet reduction that they're going to be doing. I believe the market was pricing in about 90 billion per month. That's split, I think, 60-30 between mortgage-backed and bonds, maybe not respectively. I'd have to look back at my notes. But in the notes, or in the meeting notes, they discussed roughly that number, about 95 billion. That is split between bond products and mortgage-backed securities. So just remember, it's not 95 billion in one area. It's split between the entirety of their balance sheet by some percentage. So these are all considerations for the rest of the week. They're considerations for your portfolio. What should you be doing to prepare for the market that we're about to enter? The technicals are offering you information about what is to come. One thing that I'm pretty adamant on is a little bit of additional diversification moving forward, looking at not necessarily getting into these strong stocks at all-time highs, but waiting to see, how they posture themselves moving forward. Are they going to trend? Are they going to, fade pretty quickly on bigger changes? Obviously pull in a little bit and allow for better entry and risk reward, along with starting to reduce exposure in areas that might underperform. Unfortunately, something like a communication sector, very strong recovery off the lows, that's tradable short term, but we might want to be on the lookout for bigger rejections, bigger trend lines, the fact that this is still a downtrending market on higher time frames. And what all this means is, there are moments in time to think bull, and then there are moments in time to profit take and basically reduce exposure, waiting for the next setup and waiting for the market condition to be more favorable as a bull. Whereas other markets are already much better postured and offering much better upside than some of the timing events of different sectors. So with all that said, there's a few minutes left. We can look at a couple of stocks from yesterday. But overall, this is pretty much it for the week. Just wanted to call out, keep in mind that we are on the lower bound of the expected move. Watch out for volatility this week. VIX had a nice spike yesterday that did retract. And if I look at volatility futures, which are not on my list for some reason, I look at volatility futures, we're still in contango. which is good relative to a bullish lean in the market. But yesterday did uptick these contracts a bit. So they went up in price, even though their spread is still normal. Um, if we start to go a bit more flat here, this is where volatility can really kick back in. And instead of seeing normal style trade, what we can start to look at instead is these volatility ranges where the market will ping pong back over multiple sessions. We'll get gap up opens that get sold, we'll get gap down opens that get bought, and there'll be this massive sort of back and forth, taking out a lot of short term traders. And obviously, the long term perspective becomes cloudy during that time. So, let's see. Question: do you happen to know whether increases in credit card interest and adjustable rate mortgages as a function of prime rate hikes are known to have an appreciable impact on consumer spending? I would say that it's correlated. Um, I don't know if it's exactly like if then to where you're going to see as soon as those changes take place, that becomes a reduction. But conceptually, it makes a lot of sense. If your interest is higher, it means that credit card debt has to be paid off either quicker, or it's going to put more financial pressure on those with heavier credit card debt. So, depending on how long that takes to percolate into the marketplace, it's usually not immediate, but it puts more pressure. And that's why it's kind of a lagging indicator. Say that's apply immediately, but when those adjustable rates kick in, that becomes additional financial burden, and consumers spend less if their wages or their income are relatively flat, yet their debt and liabilities go up in price. So, the idea is that, free money or cheap money is becoming more expensive, and that becomes a problem for consumer spending. So, let's see. Anything else? I think we're all good for today. Yeah, let's go ahead and call it here. Um, as always, thank y'all so much for letting me come on every morning and talk through some of this with y'all. Please do review some of the videos posted on YouTube. Trade recaps as always, but we do have some larger macro information starting to be published. And that's certainly helpful to get bigger trade ideas and basically to focus in on some of these areas of the market a bit more than we used to in the past. So, as always, trade safe. Stay tuned for pre-market prep today, and hopefully y'all enjoyed some of the volatility that we're starting to re-encounter inside of the S&Ps. So with that said, I'll see y'all next week. Have a good rest of your week.
All right, here we go. Let's go ahead and get this thing
Good
up and
morning,
going.
buddy. Your audio is way low.
Low for a change. Well, that's nice. All right, let's see here. Oh, cool. I can kind of see my gain button in the camera. Let's see here. Up a little. How's that right there?
Much better.
A little better?
Still a little lower than mine, I believe, but
How about right now? Good? Testing.
yeah, good
All right,
enough.
cool. Thank you. Appreciate that. Hello everybody out there. Looks like we are in here looking at this. All my charts are up. I think we're actually going. How's it going, bud? How's yesterday for you? How's things going?
It was very nice. Had a chaperoned zoo field trip with my son,
Nice.
and yeah, so he had a ton of fun. I had a ton of fun with him and his friends running around going crazy. So I'm exhausted. My legs hurt, but other than that, all good. Ready to get back, and I come back to a questionable list at best here, I see. So, how about
Yeah,
you? How are you doing?
questionable is the word. Yesterday we were a little indecisive yesterday, but we had some good trades show up, so that was nice. And of course, the Fed decided to talk in the middle of the day, which gave us all a little fun.
Yeah, the
But
minutes came out at 2.
yeah, but otherwise, it's been nice, man. We've been having fun, trading the open with Jared, having a party. I mean, it's good times.
Nice.
Not living the life like Andrew and Brian, getting to
Who will
Egypt
be?
and
They'll
Cairo.
both be back today, so
Nice.
that'll
Oh,
be
that's
good.
right.
Yeah.
That's cool. Everyone, you'll have something to look forward to there. We got Andrew and Brian in the saddle today, so that'll be exciting. So, so happy, right, Jared? Jared and I are just so happy. Um, so let's go ahead and pop over to the spy real quick and just kind of see what we're looking like today. And we don't have a lot of gappers on the list, and you can kind of see here. This is kind of why. We had a very thin, indecisive day today, and today is looking very thin and indecisive as well. Now, fortunately, on a spread this tight, we can break in a direction and end up having a really great day today. So, no reason to get too discouraged yet. But as of right now, volume is crazy light, participation is crazy light. So, we're just going to have to sit back and wait for things to wake up a little bit. We did manage to get a couple of good trades in today. For those of y'all who were traded, let's see here. Check this. Traded a B buy. There we had some folks actually get in on this. We had a nice gap fill here. We actually had a textbook gap fill. Actually ended up closing at the previous day's close, which is, I mean, that is almost the exact definition of a gap fill. So that was pretty cool. Tech stock kind of stayed in place along with the SPY. Although we did get a little bit of a sell on Facebook that a couple of us were able to take advantage of. Twitter's still a little musky, so not really doing much the past couple of days. So and really that was the majority of what we got in yesterday. A couple little other things there when the news broke out, but for the most part, just super choppy. Anything interesting going on there in the pulse there, Norm?
We just had initial claims and continuing claims came out. Initial claims a little bit lighter than expected. Continuing claims a little more than expected, I believe. Got a couple of Fed speakers today. Got Bullard out of St. Louis speaking at 9, and Evans and Bostic at 2. Consumer credit at 3. It is a go back to sleep kind of day at the moment, but
My pillow day for
we'll find
sure.
something.
Not the brand, the just the pillow.
Yeah.
Um, cool, man. Well, let's take a look at a couple of things here, and see if we can't get through this gappers list and maybe shake a couple things out here. I'll just hit these kind of normal requirement stuff. If anything's really interesting, Norm, feel free to holla. Otherwise, I'll just take a look and move.
Yep.
So SST System One Inc. Might be the first time I've ever looked at SST, to be honest.
This was on our
Um,
list yesterday. They had earnings, or they. This was on our list earlier in the week. They
hmm.
had earnings. Um, the
like,
morning
5th.
of the 4th.
Oh
So,
yeah, and the 5th
yeah.
it just had like a crazy rangy wick day and then
Yeah.
nothing. So
Yeah.
not looking like a great daily trader, to be honest, y'all. So, but we may revisit it. But right now, it does not look like it trades great during the daytime, except maybe. And that was probably. Oh, that was right here at this open. And then other than that, just junk. Yeah. Oh, and when it did trade, ooh, that makes me nervous. Okay, so yeah, not a great one. SBFM. Sunshine Biopharma, they were on yesterday. Ended up just kind of selling back down a little bit, but now gapping up. Lower price stock floats around 4 million. I don't know. I mean, if you're into these, this one actually kind of trade. I mean, it had some
Thor,
movement, but
which ticker are you talking about?
SBFM.
Something's wrong with your screen. It's lagging really bad.
You don't see SBFM?
No, it just flipped over to that.
No, Carlos is great. Carlos is doing some family stuff.
Yeah, he's on vacation.
He sent he posted a beautiful Twitter of him, I think, at the airport, taking some trades and crushing it. But yeah, there is a little bit of a bet. Anyway, so SBFM, I don't know, not really my style, but if you guys like 4 million float, I mean, it's moving in the pre-market, so ish, that's not bad. HPQ, which is Hewlett Packard, rare stock to have come up on the list. Normally only comes on when it has earnings or something like that, which is probably what happened.
No, this is a terrible intraday trading stock. That
Yeah.
having been said, every dog has its day. Warren Buffett's Berkshire announced they have acquired a $4.2 billion stake in HP, and I believe that's around 14 or 15%. So,
all right. So I mean, it's a catalyst. So will it make it a better trading stock than it normally does intraday? We'll find out. But who knows? I agree with what Norm's assessment was. Anytime I've really looked at HP, it's never really just traded well for me. So, but maybe today is its day. Let's see. CDK Global Inc. Gapping, but not a lot otherwise. Yeah. Let's see.
CDK is a buyout.
Yeah, buyout. Yeah, I don't like buyouts. All right, so not great. DDL, which we only watch this company for the name, but I think I learned about this one yesterday. Chinese grocer in Caymans, which I think that's kind of cool. But had a big day a few days ago, but other than that, it's been fairly indecisive. I don't know on this one. It traded throughout the day yesterday. It was just horrible.
Yeah, I'm not familiar with this one. I was kind of joking about it earlier. I guess the first time I've ever seen it, but was it yesterday or the day before? It popped, and Jared was saying it traded great. I don't know if that's going to do that again. It was 2 days ago, so that must have taken off after I was done. So,
yeah, it definitely had a bit of a move on one of the days, but I don't know. Yesterday it was absolutely horrible. All right, so that, believe it or not, that's our gap up list. We have HPQ as the leader on our gap up list, which is that I'm liking Norm's idea of going back to bed more and more.
it's kind of rough, yeah.
Gap down, not looking better at the start. VAPO, Vapotherm. I'm going with Vapotherm. I like it. Gap down heavily, $9 stock. 22 mil float. I don't know. Probably not really my style of trader, but it needs a little bit more.
Yeah, they had earnings last night, so if you were in this prior to earnings, they vapoed your money.
Oh, for sure. Only thing you'd be wishing, yeah, you'd be hurting too. Look at how much value there is at like $15. I bet there's actually a lot of people that bought into this thing up at 15 too. This thing might get a little crazy at the open. I think our gap down list just got smaller. Sophie, um, Sophie Technologies gapping down a bit, which is kind of a generous. It's almost all the way back. This one's going to come off the gap down list pretty soon as well. Sophie for me is not like my favorite intraday stock. I can't tell you how if I've really traded this one. It's also into a relatively low price range for me. It does have a really good float though. Spread's not bad. It just needs some volume. It's not being really participated with right now. So
Yeah, we'll see what it does. SoFi's been in the news. Obviously, they're a large business involved in student loans. Yesterday, the Biden administration announced further pushback of repayment on student loans, and so that's hurting them.
that's interesting. Yeah, it's man. I paid my student loans off, and I really feel like I played this wrong. Um, let's see. Let's go over and let's go ahead and get check out Becky here. You know, it's a this is another one that just it's got great float. Fundamentally, it looks like it would be a stock that would trade well, but I would just it never trades well for me. But yesterday it actually had some fairly decent price action, and the level two actually has some orders on the ladder. So this one of all the gap down, which we have three to choose from, looks okay. So I think we're going to be analyzing some request stocks here shortly. So get ready to queue up, people. We're gonna look through some of your stuff after. We'll let Norm run through community announcements here in a little bit, and then we can just dive into just analyzing some tickers and see if we can't squeeze something else. Exactly. If all else fails, there's always Oxy, right? Yeah, you want to do that, Norm? You want to knock out community announcements, and then I can just hit tickers?
Yeah, that's fine.
Cool. All right. I'm gonna go ahead and fly over community announcements here for our guy Norm, and then we'll take some tickers from all of this stuff, and we'll go there. So all yours, Norm.
Shoot, I can't see the screen because of the delay. Give me just a second.
I clicked it over.
All right. So just a reminder, every Monday night, 7 p.m. Eastern, we've got onboarding with Carlos. That's open to everybody, regardless of any membership level of trial member. You're eligible to go in there 7 p.m. Monday. That's in the classroom. Immediately following that at 8 p.m. on Monday is the technology webinars. Next week, we've got Mike talking about complete guide to understanding commissions. We broke down several different brokers over the years, and Mike will go through how all of that works so you can determine what the best option for you yourself is. Jared's reversal webinar should be posted. And then next Tuesday, 8 p.m., we've got Peter talking about how to take smart trade entries. That will be 8 p.m. This is he perfects these. He does these from time to time, like once a year, and every time he improves them. So that'll be next Tuesday, 8 p.m. Then psychology, Dr. Reed was last night at 8 p.m. Eastern. That should be posted soon. And next week, Mike, 8 p.m. on Wednesday, Trading Psychology 101. Why should you care about trading psychology? If you've traded any time at all, you know psychology plays a large role in trading performance. Then mentorship on Thursday, 11 a.m. With Andrew, 4 p.m. with Ed, 8 p.m. with Thor. Don't forget about StockTradingSimulator.com, our free web-based trading simulator, available at StockTradingSimulator.com. And if you're watching on YouTube and haven't been in the chat, you'd like to give it a try, you can go to BearbullTraders.com, scroll down about halfway down the page. You'll see a button that says Test Drive. Now, click that. Use the promo code PREMARKET24. It'll get you a discount off the intro membership. 7 calendar days, 5 trading days in the room. It does not renew. It's only a one-time charge. And if you'd like to have access to all the webinars I was discussing, you can use the promo code HelloSpring. That'll get you 50% off the Elite Annual Membership.
All right, beautiful. Thank you, Norm, for rocking those out for us. We're gonna pop over to YouTube first. I've already got some tickers.
I'm going to throw out, first of all, Thor,
What you got?
MNTS, if you don't have that.
MNTS?
Yes, MNTS. Now, I usually don't throw out a $4 ticker, but they did have big news with SpaceX. It was roaring earlier. Maybe it picks up again later. I don't know.
Cool.
But
I like that for sure. And
considering the list we have,
right.
it might be worthwhile.
I mean, fortunately, it does actually look like even on its catalyst days when it moves, it actually looks like it does kind of trend a bit. So if it's awake today, maybe we get some good play on it. So I'm down. Yeah, I'm with you. We might need to hunt some stuff. So we've got some of the usual tech stocks kind of getting called out on Twitter, and Apple being looked at. Twitter obviously is a stock that we had Musk has now come onto the board of, which I find that incredibly just fun. So we had the big gap with the news. We then kind of filled it a little bit, and then now we've kind of found this really sweet value area at $51 to $50, and now we're waiting to see as the market absorbs this news, where we actually value Twitter at. If it actually values higher because of this, or does it value lower? If the market decides it values lower, we fill back in and drop. If we value it higher, we're at VWAP, so it's go time. So, Twitter could certainly turn out to be an interesting play today. The other thing I like about Twitter, I'm going to just load my 15-minute chart because it's easier. We've got a really nice tight central range here for our cams. So if we can, if we can sell a little bit or rally a little bit, we could give ourselves some opportunities for some range plays here out of the range, which could be a lot of fun. Apple kind of looking similar. The one downside to both of these tech stocks is that our value area is in the center part of the range. So it means they could still be quite choppy until they finally break out. So we might have some chop at the beginning of the day, and then maybe break out towards the end. Oh, JD just popped up on the gap down list. So I'm going to pop over and take a look at our buddy JD. They offer some opportunities from time to time. JD opening actually pretty low in the range right now. It bought off of this area yesterday. Now it finds itself back down there, so that's very interesting. The one bad sign or downside to our good buddy JD, who for a little while was a really great trader, lately the candles have been very, very small. So it's not providing quite the ATR that it was on days like this, right? So, which were some really nice days that we played it, a little while ago. So we'll have to see if it sets up properly. But if it loses, like you can see now, we're right at hold on, move forward. You can see here we're right at previous day's low, right? So if we can open up under previous day's low and lose S4, open up under S4, well, we could be in a breakdown range on this one, which would give us a rundown to, maybe $50 or even lower. So actually, JD will probably end up being on my list today just because I like its extension and range. And if anything goes weak today, JD looks like it'll be a good play. Either ways. So let's go to Apple. So Apple on the daily for me has some potential. We have kind of lost value and we're kind of we consolidated here yesterday. If the market decides to sell today, especially tech, Apple has some decent potential with this big kind of gap to the, this big open value area to the downside, because we just kind of ran straight through this without any consolidation. So we could come back down into 160 and, consolidate here before moving back up potentially. But we'll have to see how the market opens. If the market opens in strong, we could find a rally point here. I don't really see this as a very good rally point, but we'll have to see what happens on it. Right now, I'm kind of feeling it moving still down towards the lower point in its range. But we will see how that goes. Cam point smooth on the daily, Darden. Make sure you're selecting this. make sure you're selecting the type for grid. I don't know if you can see that or not, but right here where it says grid, and if you have line in, then it makes them like kind of squiggle, and it makes them kind of run these weird lines. But if you put it on grid, it cleans it up by putting these long straight lines in instead. Sorry YouTube, had to. We always help. Yeah, for sure, Ben Mueller. This has definitely been some solid trading on Twitter. I mean, catalyst is everything, right? So that's why we look for stocks with high catalyst, right? Because the extra participation just makes them trade so much better. Frankie wants to look at low. He's saying low volume, pun intended, but he likes the range. Ooh, a little thunderstorm going on right now. So if you guys hear some gentle, relaxing rain sounds through my microphone, that's what's going on. So we have, so the thing with low is starting to get fairly extended to the downside. And if you come back to here, we do have a really serious consolidation point around 200. So I don't mind where low is at as far as the daily goes, right? I actually kind of like this as a defense point, like, last month's S4, and we already know because we looked back, there's a consolidation point here. So low, it's missing volume, right? We don't have participation yet, but the chart itself offers some potential. If you see, I would look at stuff like, if oil, for instance, starts to sell a lot, right? Low would be a good place to come look for a rally, because as transportation costs go down, right? Some of these larger retailers, especially ones that are involved in home building, that supply lumber and hardware and things that are shipped and that are heavy and have to be transported, their margins get a lot better. So as fuel goes up, Home Depot and Lowe's and Walmart, a lot of the times, stock, large retailers like that will actually drop, because you're just factoring in the cost of their transportation, kind of, that it's going to hit their top line a little, or their bottom line a little bit. So let's see here. I'm just making sure I didn't miss anything there. Okay, cool. So let's look at Oxy. And if anybody sees anything wake up with any real good volume, feel free to yell that out. So Oxy, we talk about value, and Oxy is a beautiful example of that. Look when Oxy went into play, right? And it ran up to right here, and then it found value here, and it's been there ever since. Right, so Oxy is going to be a tough play, because we've basically set up this value range now, right, on the daily on this thing, and it's just, it's just going to stay in there. But we're at the top of the range at this high value area. So if it starts to sell, let's get a little closer here so it makes it easier to see. Right, if it starts to sell and it makes a new low below, looks like it's pre-market low right now, but yesterday and previous lows, if it can make a low below those and make maybe $55, then maybe we start changing our mind a little bit. There's a lot of people who have been buying Oxy. We've been consolidating for a long time, and the question, and I always run this question, right, is there's a little bit of delay, it would seem, going into the room. I'm not really sure. But I think it's current on YouTube, but there's a delay as it comes back into the room, and I honestly have no idea why. But I'll try and do some updates and run some stuff this afternoon to see if we can fix it. But we'll see what happens. So, yeah, otherwise Oxy looks like it's kind of maxed out through R3 in the pre-market, and now it's making new lows. So unfortunately, right now I would actually look for Oxy to do a bit of a squeeze, and then I would be looking to play it to the short side the way it's setting up now. But we've got a lot of time between now and the open to see if that changes. Best time frame for cams is all time frames. that cams don't recalculate in different time frames other than the daily. Like, so if you go to a daily, cams start calculating. But if you're on 1 minute, 2 minute, 5 minute, 15 minute, an hour, that all calculates all the same. Let's see here. Are there links available to your charting setup for a new meeting, Matt? So if you can get into the BBT chat room, my chart configs are actually uploaded into the room drive. So and you can download them from there, if you would like. Let's look at a couple more texts. I'm seeing NVIDIA and AMD getting talked about. Let's check these guys out. So NVIDIA had a big gap and then sell, which was a lot of fun. And it's now in this low range just below VWAP. So we're definitely at kind of a question point here, which is what's going on with tech, right? Tech in general, right? Kind of, it looks a lot like NVIDIA, right? It's dropped below and got below VWAP consolidating, and now so we have tech as a whole, right, has basically undered VWAP, and now it's tried to go back over, and it's immediately been rejected down, right? So, and I mean in a hard way. I mean that gap, and then we didn't even fill it, right? We gapped and sold, right? So we may get a bounce here to try and fill this gap back to VWAP, but it's also possible, we could be doing this again, right? We tried this before, we dropped, we stuck around for a little bit, and then we sold. Right, so we're gonna have to be really, really patient today to really time this right, because you don't want to go short too early and get squeezed out, but you don't want to miss your chance. So you're gonna, I'm really gonna be focused, especially in tech, to see what we do around previous day's close. Right, so we're already under previous day's close, but we're probably gonna open somewhere a little bit in the central range, like around 352 to 351. I want to see it squeeze into VWAP and previous day's close and see what decision we make. If we reject that, move down and make new lows, then I'm probably going to have, I'm probably going to start looking for tech to stay weak today, as maybe, energy or one of the other sectors picks up some bid. Right, so we'll be taking that. Other, concept, like I know we were looking at the other day, we're looking at Costco, right, which is kind of like similar to Low and those, except for Costco is in a much different position. Look how strong Costco has been, right? Unlike the other retailers, Costco's really been pushing it. Now Costco finds itself gapping up almost. It's not quite there on the gap up list, not quite far enough, but it finds itself moving upwards, right, and potentially going to open in a higher row. If we could get a little bit more volume in on this one would look interesting. But it's had some really decent intraday moves the past couple of days. I know Walmart had a good move yesterday. Right, Walmart made a really nice consistent buy up yesterday. Really nice move. Right, I don't know if it's at all-time high, to be honest, and I don't want to zoom out that far, but it's got to be. I mean, if it's not, I mean, it's definitely the highest it's been for a long time. It might be. Yeah. Thank you, Jared. It is at all-time high. Yes. Thank you, Jared. AMC, sure. All right. So AMC is looking a little interesting. So AMC had this really big meme style breakout, because this is what AMC does, and then it basically just threw this giant indecision candle, and now it's been selling ever since. But our volume has dropped, and then on this last day it actually picked up into the sell, right? So that's interesting to me. To see what we came into, and now we're actually opening up central range. So I'm going to pay attention to AMC and see what happens. Yesterday it sold down, found some support here. I want to see AMC come down, and if it opens here, I've got nothing, but I'm going to look for it to sell down around $20 again to see if it defends. If it holds PDC, maybe I go long at it if it gets low enough, but I'd have trouble trading PDC because that's central value. Otherwise, I'll actually wait on AMC and see if it gets above 2150. If it gets above 2150 and sets up above R4, I'd play it for a breakout up there. But I'm not going to get long in this unless it sells down to $20 or it gets above 2150. But either way in here, it looks like it's going to set up like a kill zone. So I'm not going to try and do that too much. But otherwise, I do like how we've kind of sold, but that volume came off a bit, and then as we've kind of found this little narrow candle here, we actually picked up a bunch of shares. So it'll be interesting to see what happens there. Neo, let's do Neo. All right, so Neo has kind of lost its moxie a little bit. Neo is really fun to trade through February. We had just been in this nice sell, but lately, even into March, but we've been kind of pushed up, and maybe the past 2 weeks, Neo has been kind of stuck here. Currently, the level 2 on Neo looks balanced. So that also kind of supports Neo just being stuck here. We did get a bit of a sell on it a couple of days ago. And then we kind of chopped at S4 yesterday. So the one play that I really do have on Neo is we do have some tight cams to the bearish side. If we rally on Neo, I would look to short it around 22. If we start to sell, I'd actually probably long around 21 for a pullback on the daily to come back up and squeeze a bit. So, but right now, again, and this is where we get a lot. This is Raja. It's a little delayed in the main chat. The video for some reason. If we pop over, if you're really looking at these, we got to be really careful, because we're gonna have. I have a feeling we're gonna be choppy, at least in the open, because everything's looking to open in its central range. Like every stock that I'm really analyzing, the vast majority of them are opening right in here in value, right? And these are just really choppy areas that tend to do this a lot, right? So I'm gonna need it. We still got time. We got a half hour before we open, but I'm gonna need this to either sell down to here, right, lower, so I can look at it as possible buy opportunity for these lows to defend, or I'm going to need it to actually rally a bit so I can short somewhere up here, so I'm at least playing the tops or the bottoms of this range to keep myself out of all the muck. But again, because of how tight our range is, if it comes up here too aggressively, I might just wait to see if it breaks out and gets above 2 days ago's high, and if it does, I'll long it off R4 for a breakout. And that could be a very fun play. Neo, when it breaks out, can really run. So I'm going to keep an eye on Neo probably today, but only for that. I'm going to be looking for it to set up for something with a little bit more potential. But I feel like I'm not going to be trading a lot at the open today because nothing really sets up for me. Let's go take a look at the SPY real quick and see how the market is starting to look a little bit in the open. Let's see. SPY still looking a little weak into the open. Again, we're right now we're right in center value, right? So you can see yesterday, right? We kind of sold down in the pre-market and then found this value area and basically just chopped it. Today we're still in that same value area, right? So we need this thing. Again, if for SPY, and it's when I'm going to time most of my longs, is I'm going to wait for SPY to probably come down to 443 and defend somewhere around here. If they do, I'll start looking for longs in related sectors, right? If it comes into this and doesn't throw volume and it's not aggressive enough, I won't do anything. I'll wait for it to go below S4 and then I'll play a breakdown on the SPY. If you look in on the daily chart, let's not underestimate the fact that we are sitting at value and we are sitting at VWAP, right? So if we lose yesterday's low, especially, right, there's going to be a lot of decisions being made, right? Because we're right here, right? So we've got bulls that are bought in here for the next move up, right? And we now have bears that have shorted from in here. So if the SPY can make new lows here, our bulls get invalidated and our bears are proved right. This is going to cause ads on the short side, which will further imbalance the market makers. This is going to cause bulls to start taking profit, which will further imbalance the market makers. And they're going to have to they'll end up running down towards 440 and then 430 eventually if that occurs. So we're going to need to see a pretty hard level defense here on some of these market ETFs if we're going to hold SPY to VWAP. If not, we could be looking like another. We went under, over, over. Might be looking to go back under and stay under for a little bit again. So we'll have to see how that goes. Capitulation. That's our Scrabble word of the day, Miles. Capitulation. Andre and Michael, Microsoft, saying we've got some volume in the house. Let's check it out. Oh yeah, we're over 1 million shares. So I'm actually going to run my high volume scanner now. I normally run it around 9 o'clock, but let's go ahead and run it. So right now, high volume scanner is picking up HP, Microsoft, SPY, and other related ETFs. So Microsoft does have the volume. You are right. So let's take a look at that. So Microsoft had a really big gap and sell yesterday into VWAP, and now it's moving downwards away from VWAP. See, this is what I'm talking about, y'all. Like if Microsoft decides to lose low and run south, and I mean Microsoft's big enough to help pull tech. And if Apple starts to go, AMD starts to go, Microsoft starts to go, if all these stocks start to sell a little bit more because of this weak sentiment, I mean, we could definitely see a nice drop in the market today. So it'll be really interesting to see how this morning shapes out. Sorry, there's a little bit of lag into the main room for some reason. It's on time for the on YouTube though. So I like Microsoft. So I'm going to go ahead and put my list together, and then I'm going to pop over and look at what our moderators are starting to like. So for me right now, the standouts for me, and I'll create a new line for my list. Right now, Microsoft, I like a lot. I like HPQ, although I rarely trade it. It's got some stuff. Don't like Sophie, Mints. Let's see. I'm just narrowing down the stuff I like. JD, potential, low, don't like. Oxy, Nvidia's market constrained, AMD, I like. Cost, I don't like its price and spread. Walmart, I like. AMC, I don't like. Neo, I like. All right. So initial list for me is as follows: Microsoft, Hewlett Packard, JD, Oxy, AMD, Walmart, Neo. Right now, those are the ones that are in there that I'm kind of into. So we'll have to see how that goes. My list will whittle down to 1 or 2 stocks probably before the open. So any other stocks that we haven't hit that anyone in the main room or the YouTube Landia would like me to check out? F just hit the gap down. F just is under S4 on the daily, so it's in a really big breakdown range. It rejected VWAP heavily a few days ago, now finding itself near $15. I'm not sure about how I like Ford. I haven't really traded Ford too much, and for me, on most days, it does not trade very well. But I mean, it's moving, and volume not quite there yet. But it has just recently lost what looks like some pretty hard levels. So, if you look back here, right, we had this kind of this bottom at 1560, even as, and we're now consolidated under that and moving downwards. So it's pretty weak looking. SQ. SQ is the stock that moves only when I don't watch it. I feel like SQ is that, that ghost on Mario. If you guys play the old school game, it's like the ghost that is, if you're looking at it, it just sits there looking at you. But as soon as you turn your back, it like does something, right? And it comes, yeah, it's Boo, right? Boo. I feel like SQ is my Boo. Because I will watch this stock for days at a time and it'll trade like this, and then I don't watch it for a week and it does something like that. And I'm just like, wait, how did this happen and how did I not know? Like nobody even told me. Like this thing just went up. So now the one thing I like about Facebook today, or one of the things I should say, is we are kind of at this low of this consolidation range that it's put up over the past, let's call it month. And we are at that low right now, below S4, and make a bigger break. So the only way I short SQ now is actually if it rallies. If SQ squeezes back to R3 or even as high as R4 near these other daily levels, maybe I think about shorting, right? But if you're going to go short on this thing, you actually need it to prove it, because it's so close to the bottom of a strong established range. You just don't want to short into it. Because your potential for breakdown is not quite there, right? You want to wait a little bit longer, and get some confirmation off of this thing. But it'll probably do that whichever day I'm not watching it, because that's just the way we do this. All right, one more time on JD, and then we'll check out Facebook. And then we'll wrap this show up. JD, I got JD on my list because I kind of similar to what we were just talking about on SQ. Actually, we're kind of in this crazy breakdown range, and I want to see it if it happens, right? So I'm kind of looking at like around this $57 area. If we can lose that, bounce and then maybe test S4 and then do a breakdown from 57, that could be a really beautiful S4. Breakdown today. So I think that's what I'm going to be looking for today. If we hold here and rally back into the central range and retest S3, maybe we go long today. I mean, we are once again, we're at the very bottom of a very established range, right? So we do have some probability just for longing this thing, because we've supported here so many times. We actually have some probability that we support here again. So, but it doesn't mean it's a long. If the volume comes in the wrong way, if the ladder loads low, loads bear, then it's a short. But we'll have to keep an eye on it till then. All right, everybody. Well, it's almost it's about 9:15, so I'm gonna go ahead and wrap up today's. Oh no, sorry, I said Facebook for YouTube land. Let me hit Facebook real quick for you. So Facebook, kind of similar to all these other techs. Look, it's really hitting the bottom of a range. So again, same thing. I wouldn't short Facebook yet. I wouldn't even be able to long Facebook here. I would need it to sell to around 220. I could long, or if it rallies around 226 and then rolls over, I could short. We got a really tight cam range, so a breakout is possible. But you're going to have to slow play this one because you're opening in a kill zone, so it could be a lot of chop. All right, so now I'm doing it. I'm going to head out here. We really didn't get much of a moderator's watch list today. The vast majority were not liking stuff. Oh, they just started popping in. So Dima, Microsoft, Apple, Mike not liking it. I'm gonna do scanners and the ones I mentioned before. Susan's watching Spy, Q's, and HPQ, and Brian Pesum, the prophet of profit, back in the house after just he had to go to Egypt to recharge. You guys were wondering how he is able to call trades what seems like minutes before they actually happen. The reality is he takes annual trips to Egypt, lays in a sarcophagus, and imbues himself with the power of the pyramid. And that is how he does it. Don't believe me, go to his Twitter account. He posted pictures. So I hope everyone, he's looking at Oxy, JD, Hewlett-Packard, TQs, and SQs. So I hope everyone, Isaac, we don't talk about that part. So I hope everybody had a great day today. I hope everyone or has a great day today. I hope everyone enjoyed the pre-market show. If you did, throw me a thumbs up. I'd really appreciate that. If you haven't already for some reason, please like and subscribe to the channel. ring that bell so you'll get alerted whenever we do go live for our pre-market show. Normally we have Carlos and Norman here, and you're getting a little bit more level action. Today you get this. In the main room, we're going to have our Profit of Profit Brian, along with our fearless leader Andrew, back in the saddle today trading. So we're really looking forward to that. I hope everyone has a great day again, and as always, keep it green, y'all. Thanks.